Business then, we're going to start with that visit by President Francois Hollande to Algeria, because it's as much about business as politics, isn't it, really, Will?
That's right, and what's interesting is really the former colonial relationship has kind of been turned on its head, really. Algeria's economy now doing rather well, while France is pretty stagnant, with the economy dragged down by the Eurozone crisis and the global financial crisis, the ongoing effects of that. France is still the #1 source of Algerian imports, due, of course, to its history with the country. But China is catching up, and actually, China is expected to overtake France in these stakes over the course of the next year. Of course, the thing that really puts France ahead at the moment is the high number of French Algerian citizens, people with dual citizenship, those historical links, basically. And a lot of French companies are keen to invest in Algeria. Among them, Renault, the car company, is signing a deal today. They're going to be setting up a factory in the country, and they're going to be producing 75,000 cars a year there, the lower range of their market.
OK, well, let's stay in France. Expecting to hear about new plans today to shake up the banking industry later today, aren't we?
Yes, this is the long-expected reaction to the bailouts that came about in the financial crisis. Basically a way of making sure that the taxpayer doesn't get footed with the bill again. Now, it's similar to what is happening in the US and the UK. Legislation to separate out the retail banking side of things, your usual sort of customers getting loans, etc., and day-to-day banking, from what critics call the casino banking side of things, which is investing in complex derivatives, in speculative investments. It's unclear as yet exactly what France is going to do, but some sort of splitting off of those more speculative elements into separate subsidiaries, which are financed separately. Pierre Moscovici, though, said that the finance minister, said he's not going to break the banks in two. It's not going to be too onerous for the banks, it's thought.
Going to stay with banks. Swiss bank UBS been hit with a massive fine. This was its role in trying to manipulate the LIBOR rate. Let's get a reminder of exactly what that is.
Yes, of course, that's the interbank lending rate, which is used to set everything from mortgages to lending rates. Banks report the rates themselves, and then an average is taken to find out what the overall rate is. Now, individual banks have been accused of trying to fiddle with that rate, trying to gamble on it. If they knew what it was going to do, then they could put money on that effectively. Now, UBS has been hit with a €1.2 billion fine for its role in the affair. It's admitted wrongdoing in its Japanese arm. It's Swiss, British and US financial regulators who have slapped that fine on them. The second biggest ever, the biggest ever, of course, coming just last week, HSBC for money laundering in the US.
Okay, I feel like we should have a jingle at this point. It's fiscal cliff update time here on France 24. Democrats and Republicans inching closer to a deal over that fiscal cliff, aren't they?
Yes, they are. Both sides are now showing some compromises, although Republicans have come up with what they're calling their Plan B. They want to pass this through the House of Representatives, which they control, so that even if the Democrats don't go along with that, they can say, well, at least we tried something. Stephen Carroll explains.
Despite signs a budget deal may be close, the Republicans have moved to Plan B. They're to put a bill to the House of Representatives as a backup plan to the fiscal cliff of automatic tax increases and spending cuts due to come into force in January.
I believe it's important that we protect as many American taxpayers as we can. I continue to have hope that we can reach a broader agreement with the White House that would reduce spending as well as have revenues on the table.
The Plan B allows for tax increases for those who earn over $1 million a year, but the bill doesn't make changes to the $1 trillion in spending cuts that are part of the fiscal cliff measures, including a $500 billion reduction in military expenditure. The Republicans are trying to force President Obama's hand, but the Democrats say they'll block the bill in the Senate.
Speaker Boehner's proposal is not balanced, will not protect the middle class because it can't pass the Senate, and it doesn't do anything.
The president's current offer would see income tax increase by 4.6% for those earning over $400,000. He's allowed for spending cuts of $1.2 trillion over the next 10 years, including some $400 billion from federal healthcare programs. The sides have moved significantly closer, though, and the markets have been buoyed this week by the prospect of a deal. But with time running out to finalise and pass a bill, these talks may be heading for a cliffhanger.
Well, all that's given a little bit of optimism to the markets.
That's right, yeah. Let's take a look at the Asian markets. Buoyed up by a previous session in the US, which ended in positive territory. You can see only the Shanghai Composite basically ending level there, but the other markets all in positive territory. In Europe, meanwhile, the CAC 40 actually in Paris is at its highest so far this year. Also helped, of course, by news that Standard & Poor's has given Greece a vote of confidence, upgrading it from junk status from selective default. UBS in Zurich down 0.6% after those fines.
Now, we've got some badly performing stocks in the US, perhaps unsurprisingly firearms companies.
Yes, I suppose we could have seen this one coming, but as politicians scramble to react to that shooting on Friday, the markets have already spoken. Private equity firm Cerberus Capital says it is selling the maker of the Bushmaster rifle, which was used, according to police, in last week's shootings. Meanwhile, a national sporting goods chain has suspended sales of assault rifles, with President Obama saying he's going to legislate against them. You can see the shares there of major gun makers. Smith & Wesson down nearly 10%.
Now, next, the photo sharing service Instagram has angered its users with a new license which says the company can use images without permission or compensation.
It's the world's most popular photo-sharing smartphone app. Since its launch in 2010, around 100 million users have signed up to Instagram. In April of this year, it was bought by Facebook for $1 billion. On Tuesday, Instagram announced an updated privacy policy, giving it the right to sell users' photos to advertisers without notification.
You agree that a business or other entity may pay us to display your username, likeness, photos in connection with paid or sponsored content or promotions without any compensation to you.
Instagram maintains the updated privacy policy will make it easier to share information with Facebook, detect system problems and fight spam. But after uproar online among users who said the changes would destroy the business, its co-founder issued a statement saying the move had been misinterpreted.
To be clear, it is not our intention to sell your photos. Instagram users own their content, and Instagram does not claim any ownership rights over your photos.
The company says it will be making changes to the policy after the backlash. The privacy update is due to take effect on January 16th. Users wishing to opt out will have to close their Instagram accounts. Logging into the service will give their consent to the changes.
And finally, when is an iPhone not an iPhone? Will Edwards has the answer.
Well, it's a new Brazilian iPhone, nothing to do with Apple. In fact, it runs Android operating system, Google's rival OS, and it's made by IGP Electronica. This firm applied for the iPhone patent for the trademark back in 2000. Not long after Apple had come out with the iMac and iMovie, but long before it actually came up with the iPhone itself. So this company has registered this trademark. It is now applying it to these phones. It's hoping probably to make quite a bit of cash out of this, actually. Not really by selling the phones. What I reckon it might be up to is after a Chinese firm registered the iPad trademark before Apple could get its hands on it, Apple paid them $60 million. So maybe this is where we're seeing this going. Apple could buy that trademark back off them, and we won't be seeing that iPhone in stores.
Loose lawsuits flying all over the place, I suspect. Will, thanks very much. That's the news from me. Cyril's here after the break.